Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamilton, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today we're discussing what Canadians need to know before renewing their mortgages, especially if they're waiting for interest rates to drop. The Bank of Canada will announce its next interest rate decision on July 30th, and many are hoping for some relief.
That's right, Steve. With the overnight lending rate at 2.75% since March, it's important for Canadians to understand the factors at play. Inflation is at 1.9%, which is within the bank's target range. So, a rate drop to control inflation seems unlikely for now.
Indeed, Janine. However, there's a study by TD Economics suggesting that the softness in Canada's labor market might lead to potential rate cuts later this year. But we shouldn't rely solely on this possibility when planning our mortgages.
Exactly, Steve. It's crucial for homeowners to be proactive. A significant portion of mortgages, around 60%, are up for renewal between now and 2026, and about 40% of these are expected to be renewed at higher rates. This means it's more important than ever to shop around.
Shopping around is key. Rates.ca highlights that lenders are competing for business in today's slower housing market. They might offer better rates or terms than what is initially offered at renewal. It's all about finding the best deal for your specific situation.
And let's not forget that the lowest rate isn't always the best rate. Some low-rate mortgages come with policy restrictions that could end up costing more in the long run. It's important for homeowners to understand the details before signing anything.
Absolutely. Reviewing your financial situation is also vital. Changes in income or expenses might affect what terms are best for you. Adjustments in amortization periods, payment frequency, or even switching between fixed and variable rates could be necessary.
It all comes down to being informed and prepared. Whether you're considering a home equity line of credit or refinancing, renewal time can be an opportunity to align your mortgage with your life goals. Always consider your future plans before locking into new terms. The Canada Mortgage and Housing Corporation has released its summer market outlook, and it's projecting a continued cooling in the housing market through 2025. This cooling trend seems to be driven by a combination of trade tensions, economic uncertainty, and slower population growth. Home prices are expected to fall by about 2% this year, with even steeper drops anticipated in Ontario and British Columbia.
That's right, Janine. The Canadian average home price is projected to decrease from $689,619 in 2024 to somewhere between $676,909 and $679,107 in 2025. It's interesting to note that many home buyers and developers are adopting a wait-and-see approach, likely due to the weaker economic growth and ongoing trade tensions.
It's quite a shift, Steve. Ontario and British Columbia are facing the largest price corrections. The high costs and reduced investor activity in the condominium market are really dampening demand in these areas. But it's not all bleak news. Quebec, for instance, is experiencing a slower decline in housing activity, benefiting from stronger market momentum and more stable buyer sentiment.
Yes, while some regions are faring better than others, the overall picture is still challenging. The CMHC report also mentions trade tensions as a significant factor driving economic headwinds. With tariffs between Canada and the United States expected to peak in the second half of 2025, these pressures are contributing to inflation rising above 3% by mid-2026 and a likely modest recession this year.
And let's not forget about the construction activity, Steve. Housing starts are projected to decline from 245,367 units in 2024 to between 224,948 and 237,834 units in 2025. While multi-unit construction remains high by historical standards, we're seeing regional variations with strong activity in Atlantic Canada, the Prairies, and Quebec, but a sharp decline in Ontario and British Columbia.
Absolutely, Janine. Many condominium projects are being delayed, canceled, or converted to rentals due to missed presale targets and an increase in unsold inventory. However, rental markets are easing as new supply comes online and demand softens. Vacancy rates are rising slightly in major centers, although rents continue to increase at smaller rates compared to recent years.
It's a complex landscape, but there's hope on the horizon. CMHC anticipates a gradual recovery beginning in 2026 as trade tensions ease, economic confidence improves, and mortgage rates moderate. However, affordability remains a critical issue, especially in higher-cost markets where many households are still priced out of the market. It's essential for potential buyers to stay informed and prepared for these changes.
As we delve into the latest market trends, the Canadian Real Estate Association has recently adjusted its expectations for national home sales, forecasting a 3% decline compared to last year. This drop is largely attributed to high interest rates and ongoing trade tensions with the United States.
That's right, Steve. While the overall market appears cooler, this doesn't mean brokers are sitting idle. In fact, many are preparing for a busy second half of the year. Despite the broader market challenges, there's still a lot of activity happening. It seems like there's a shift from sellers to a more balanced market, which could benefit buyers.
Absolutely, Janine. In places like Alberta, where the market dynamics are slightly different, brokers like Renee Hughes from Spire Mortgage are observing increased inventory and active buyers. It's an opportunity for those who are ready to make their move, especially with balanced conditions offering more negotiation power.
And it's not just Alberta. Across Canada, we're seeing that inventory levels have risen. This means more choice for buyers, particularly those with job security looking to lock down a home for the long term. It's a positive sign for first-time buyers and those who have been waiting for a more favorable market.
However, we mustn't overlook the economic uncertainties influenced by trade tensions, particularly with the United States. While some buyers are taking advantage of the current conditions, others remain cautious, waiting on the sidelines. It's a complex environment, but one where informed decisions can still lead to successful outcomes.
Exactly, Steve. And for brokers, the focus is not only on purchase markets, but also on helping clients with renewals and financial planning. With many homeowners facing higher rates and cost of living challenges, the role of brokers in providing holistic financial advice is more critical than ever.
It's clear that the demand for comprehensive financial guidance remains strong. Brokers are gearing up to assist clients beyond just the immediate purchase needs, addressing broader financial concerns during these uncertain times. This proactive approach ensures continued business and client support.
That's right. As we move through the rest of the year, those long, in-depth conversations with clients will be invaluable. It's about creating a supportive environment where homeowners and buyers feel equipped to navigate the economic landscape.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.